What is going on, everybody? Hopefully, you guys are doing well out there. Earnings season rolling right along, and we get our first window into the semiconductor industry when ASML Holdings company reported their earnings, their Q1 earnings, before the bell today. We'll get into the earnings. We'll also take a look at the earnings estimates for upcoming quarters, where the expectations are, and the fact that this company missed a little bit on their expectations. It is driving down other semiconductor makers, including NVIDIA and AMD, during this hour of trade. Now, the company did boost their dividend. We'll talk about that. Now, the financial statements that we'll go through, we'll look at the balance sheet, we'll look at cash flows, we'll look at the operating statement as well. It is in euros, and at the current time, you have $1 euro is worth $1.07 in United States dollars. So not as big a delta or big a difference as we've seen even more recently, or certainly in the past. Just keep that in mind, and I might make the mistake to say dollar rather than euro. Just keep in mind all the figures that we'll be talking about is in euro. And the question that everybody's going to have is, should you buy the dip? Shares of ASML after reporting Q1 earnings down over 7%. At least there's a few hours left in the trading. And we've got a beautiful, if you follow the channel, you know from a technical perspective, I love these channels, especially stocks. You can look at Costco, Nike. There's several others that we follow here on the channel. When you're in these channels and you're at a certain spot, there's something to do. When it's at another spot, it's pretty obvious. You can probably tell by looking at this chart what I'll be recommending when we get to the technical segment. Now, over the last year, it's been absolutely fantastic for ASML, up 42% year to date, even despite the 7% decline in shares at this hour. Shares are still up 22%. We won't get into really a fundamental argument about ASML, but they make lithography equipment. They have some competition, especially on the trailing edge lithography equipments, but they have almost no competition on the bleeding edge or the 2 nanometer type stuff. These are your high-end AI chips. They have almost no demand there. So that's why when you see ASML coming in a little light on their revenue for this quarter, also coming in a little bit light on the bookings going forward, but reaffirming their full year outlook and their sales, starts to make you wonder, have you fully priced NVIDIA for this? Have you fully priced AMD? You can go down the line on all the semiconductor manufacturers, especially the ones on the bleeding edge. You start to wonder. Now, this company also is going to look wildly overvalued because we had 5.3 billion euros of revenue. That was a 20% decline year over year. And we come over here to market cap, and you got a $381 billion market cap on a company on a 20 billion euro type of run rate. However, sales of this company's products are a bit lumpy. This isn't like a Microsoft software subscription or an Apple iPhone. The customers of these machines are only spending CapEx at a certain period of time, only building new factories and new fabs at specific times. And that's why when you look at the revenue, this quarter was expected to be down by 22%. Next quarter expected to be down by about 12%, but you're expecting growth towards the back half of calendar year 2024 and into 2025. You're expected to ramp up into about $8 billion run rate. Will the company be able to meet those expectations? And even when it does that justify a $380 billion market cap? I'll certainly let you be the judge of that. Now, we did say that their full year outlook remains unchanged. So basically at expectations, not ahead of expectations. Certainly, if they were ahead of expectations, you would see the semiconductor industry just continue to take another leg higher. We more or less expected this. The good news is more or less priced in, and now it's about meeting expectations and then potentially setting the expectations maybe a little bit lower for 2025 and figuring out a way to where you can exceed that. But they did give us a little bit of color in the fact that the second half of the year is expected to be a little stronger than the first half. So supposedly we may have 2 to 3 more months of weakness or kind of slow demand for them, and towards the back half of the year, that investment starts to pick up. As we talked about, as ASML goes, it certainly will impact the other semiconductor designers, including NVIDIA and AMD, which are seeing their shares down on the week. Now, you did get a little bit of a bonus. Despite shares being down by about 7%, you got a 5.2% increase compared to 2022 on your dividend for the company. Now, when we come over here to the financials, again, you are going to see net sales declining by about 20%, 6.8 billion down to 5.3. So your gross profit shrunk from 3.4 down to about 2.7. Now, unfortunately, you didn't have a lot of operating leverage here. When you see your revenues decline, what you typically also like to see, maybe not dollar for dollar, but you'd like to see R&D maybe not go up, but it did. It went from 950 up to a little over $1 billion. And then also, somewhat concerning, your selling general administrative costs went from 260 up to 273. So despite the declining net sales, we had increasing selling general administration costs, although the sales cycle on these things is rather long. These machines are very complex and rather large. And so sometimes you're making phone calls, you're traveling to conferences this quarter in order to close the sale next quarter or maybe even next year. Your income from operations, as your revenue slips and your expenses actually increased, your income from operations slipped from 2.2 billion down to about $1.4 billion, flow all the way down to net income. You're printing 1.2 billion euro, down from about $2 billion. You see it on a percentage basis. While your gross profits did increase, everything else decreased as your operating expenses continued to climb. Now, nothing to worry about from a balance sheet perspective. Cash on hand is over $5.1 billion. Albeit that is lower than where you are in December. When we get to cash flows, we'll see where some of that went. You do have plenty of property, plant, and equipment. They do have a fair amount of inventory as well. I'm assuming this is not necessarily finished inventory, but 8.9 billion compared to about 9.9 billion in inventory. They got a little bit of long-term debt, about $4.6 billion, but nothing to be overly concerned about there from a balance sheet perspective. From a cash flow statement, we're pulling down that $1.2 billion or 1.2 billion euro in net income compared to closer to 2, adding things back in like depreciation, also adding in things like inventory. But sadly, your net cash provided by your operating activities slipped from 733 million positive last year on a quarterly basis all the way down to 250 million. They're purchasing a lot of property, plant, and equipment. It's not cheap and it's not easy to make these machines. That goes without saying. Last year you spent 532 million. This year all the way up to 417. This is where your cash bled out of the company here. You also paid a dividend of 571 million. And so you saw a net decrease of about 2 billion euro on the balance sheet. That's where that was reflected. So you can apply this not just to ASML, but if you're looking at a company and you see you go from 7 billion down to 5.1 on the cash side, and it's not necessarily balanced off anywhere else on the balance sheet, we come out here to cash flows and it basically gives you an explanation and shows you where that cash left the building. Now, from a technical perspective, it doesn't get much easier than this. Folks, we are on, what is this? A 21-year uptrend channel. I am on a weekly chart with ASML. We are also on a logarithmic scale. Just makes these things, doesn't really do anything other than make these things look a little tighter and helps you graph these in a little bit more helpful manner. And now there's been many years have gone by where ASML will trade at the top of the channel. It's happened numerous times. There's been a lot of times where we've kind of hugged along the bottom of the channel, but for the most part, over the past 21 years, albeit there's been a few weeks during the great financial crisis, and there was a few weeks, more than a few weeks, maybe closer to a year, where during the euphoria of the stimulus, PPP money, and government stimulus era of the pandemic, that we've traded over the channel. But for the most part, we've been in this channel, and look at where we are today, folks. We're at the top of the channel. This is when you peel things off, or this is at the very least, you take a look from the sidelines. Could ASML just hover here and continue to chop at the top of the channel? Absolutely. It did that basically from 2003 all the way to 2007. We certainly could see a repeat of that. Certainly this business and the semiconductor business is hot enough and the demand is there where demands for shares could continue to go and trade near the top of the channel. What I think is probably more likely is we have a little bit of a pullback, and what I like to do is I like to dissect the channel in half, and that is where I would start a position. If you want to get into this stock for whatever reason, that is where you start your position, about halfway down the channel. Now, if it happens in the shorter run, we're talking over the next 4 to 6 weeks or so, you should get south of $800 per share. That's your spot to start a position, add to a position, etc. any further down, and you are backing up the truck more or less, because again, on a 21-year uptrend, if you've backed the truck up at the bottom of the channel, you are sitting absolutely pretty in the long run. Folks, this is one of the world's greatest companies in the world. Certainly got some tailwinds as it relates to the AI industry. Got a little bit of headwinds with the US and China more or less feeling like they're in competition. And so this company has stopped or paused or delayed some sales into the country of China on the high-end EUV machines that it makes. If that resolves itself, well, then you could throw the technicals out the window. The stock would probably make a new gap higher, but I don't expect that to happen anytime soon, given the administration that we have. And I don't necessarily think the next administration, whether it's a Republican or a Democrat, is going to change things on a dime. ASML is going to have to meet these expectations as you move into Q3, Q4. The company says that the second half of the year should be stronger than the first. If they happen to be right, there's probably a chance that the shares remain a buy. If they are wrong, then you are going to see much, much lower prices, as the stock is more or less priced to perfection. Hopefully, guys, enjoyed today's video. Obviously, be back later this week with more. Good luck with your investments.